Right, good afternoon to all my learners. Firstly, hello to my residential students or distance students. Hello to my part-time and full-time students as well. Right, we are continuing with public sector accounting, and we are now further going a little bit more deeper into public sector accounting. Before we continue, just to remember to all students that the video is here to help you as we summarize a chapter, but in order for you to go further and deeper into the chapter, it's very important that you look at the notes and the slides that have been put up on the portal, including as well as on this e-learning platform as well for you to read. Another thing to understand, I know we're all looking forward to the exam. For the exam, the topics that have been placed are only the topics that will be focused on in your paper. So these are the only topics that will be covered. I have left out material that you will not be examined on to make it easier for your studies at home or at work. Right, perfect. So let us begin with this chapter. The key terms to understand in this chapter are the following terms. You will need to understand what cash is, the meaning of revenue, income, expenses, liabilities, depreciation, and the terminology recognition. These are terms that you will need to be able to use when you're answering certain case study questions. Very important to know the terms of these terms. Okay, very good. So let us look at the introduction. Right. Okay. Now, the general objective of this chapter is basically be able to help the reader or the student to be able to understand public sector accounting in Zambia. Now, we spoke about this earlier in the topic that we had yesterday. For those of you that watched the recording, we spoke about the different bases of accounting that we have. Now, if you remember, we spoke about the cash basis, and we also spoke about the accrual basis form of accounting. For those that are watching this video for the first time, kindly refer to topic 1, okay? Or topic 1 where we first introduced cash basis and accrual basis accounting. And you can actually, that is actually chapter 2, so go to topic 2 of the video. But there's a third basis form of accounting that we have not introduced. So let us look for the third one. The third basis form of accounting, just pause, just a small little error here, let me just, right. Okay, great. So we are now going to go a little bit further in looking at the different types of basis or forms of accounting. Now, as you remember, for the first part we spoke about, this was on topic 2. So we said that there is a cash basis, meaning that transactions are recorded in this form of accounting when money is actually received or paid. Now remember, we also spoke about the meaning of a transaction. And what we said was that in a transaction, it is the time when goods or services are transferred and money is received or paid out. The moment that cash is received, that's when it's recorded. That is when you say you are using the cash basis form of accounting. We also have the accrual basis form of accounting. The accrual basis form of accounting is based on recording a transaction when it occurs. So you're not concerned anymore about if the cash has been received, but you're more concerned about when the transaction actually occurred. So for a simple example would be the following. You walk into a cell phone shop, for example, Mobile Monster, and you're interested in buying the latest iPhone. The gentleman at the end of the tiller says to you that this phone is 3,000 kwacha, but we can sell it to you on credit. So in other words, you can sign a contract, take the phone home, but you can actually pay at the month end. Notice in this circumstance, no cash has been exchanged for a product or service. In this situation, it's accrual. We call this an accrual basis form of accounting. So in other words, the fact that the transaction has taken place means that it is recorded, despite the fact that no cash has changed hands. Okay? And then we have the commitment basis. Basically, the commitment basis form of accounting, it's where a commitment has been forged between the two parties. For purpose of examination or your assessment in your understanding or evaluation of this chapter, what you need to be able to understand are the advantages and disadvantages to the public sector domain in using each and every form of accounting. You also need to be able to understand in what type of sector in the public sector would this work well in. For instance, if I was to ask a question to you all, cash basis, which sector would this operate well in? Would you say in the sector of health, education? Would you say in supply of necessities such as foodstuffs? Where and in which form of accounting basis do you think would suit that particular sector? So it's very important to understand these. Right, let's go a bit more further down. Okay, so we're now going to go into, we start off with the cash basis. Okay, so here it says the cash basis of accounting is an accounting process that recognizes revenue at the point when physical cash is received or paid out. Okay? This is explaining, this is in contrast to the accounting technique called accrual accounting, which requires revenues, okay, to be recorded in the company's books the time the revenue is earned, even though it has not been received, but the fact the revenue has been earned. So another example like I gave to you about the cell phone. In other words, you have given a product or a service. So in other words, there is money that will be received. Even though it has not been received yet, it's still recorded because it's the accrual basis form of accounting. Okay, so that's just an introduction to that. Okay? Now, another important aspect to understand, remember that in public sector accounting, we spoke about in topic 2, and I explained about the regulation or the acts that govern the public sector accounting domain or sector are very important because they form the mandate and the foundation on which the sector is governed. We spoke about 2 acts in topic 2. We talked about the Procurement Act, and we also talked about the Financial Act. And there are various other acts and regulations that are very important for you to know and understand that help us navigate under the sector of public sector accounting. Now, some of the regulatory bodies that we have here in Zambia when it comes to accounting, we look at such as ZICA, for instance, or IFAAC. Okay, it's important to understand what these terms mean. I'm sure you all know ZICA, Zambia Institute of Accountants, International Federation of Accountants Corporation. You need to be able to understand these terminologies. Okay, now remember that I said to you that it's also important that you understand the advantages and the disadvantages of these forms of accounting, and also try to look at examples of where these forms of accounting are being used. In Zambia, just to move away from the topic a little bit, you will notice that in the informal sector, such as in the marketplace, where products are sold, such as your vegetables and so forth, most of those entrepreneurs or marketers actually use the cash basis form of accounting. But as you well know, that there is still a form of accrual basis. I'll give an example. You might, after work, go to buy some tomatoes or onions from a lady who might be close to home. And because she knows you and has become quite accustomed to you, you might say that, could I pay you the 20 kwacha in 4 days? And the lady might say, not a problem, because she does not want to lose your business. She, at that moment, has moved out of the cash basis form of accounting, which records that, and has now moved to the accrual basis of accounting. In other words, revenue has been earned, but not yet received. Okay. Currently, as it's been regulated for Zambia, that it is official that we will only be using, we're looking at the accrual basis of accounting, which is actually the best form to use, which we will later go into a bit later. Okay. Now, let's look at the simple illustration of the cash basis form of accounting. This illustration will show you an example of an entity, meaning an organization within the public sector that is using the cash basis form of accounting. We also will look at a transaction, okay, that has occurred in that sector, and how that transaction is being recognized, or in other words, recorded in the accounts. Okay, so let's look at the water and storage. Right. Okay, so let's look at the following. So, firstly, the entity or organization that we're looking at is Water and Sewer Engineering Entity. So let us imagine that there is a company, not a company, but let's say the Water and Storage Entity working on behalf of the municipal council. So let us imagine a transaction that could occur. So we all know what the water and sewage, let's say, that has been tendered or contracted to work on behalf of the municipal council. Let's say, for example, Chilenje. So they're in charge of the cleaning of water purification and also ensuring that sewage around Chilenje is being well taken care of to avoid such things as cholera and so forth. So let's say in this service, this entity has been contracted by the council. So now we're going to look at a transaction that could occur in that transaction. They have been told that the construction of a sewer dam over 5 years and payment will be done in the 4th year when 80% of the work is completed. Now notice here, they've been told that they'll construct the dam. The period of time we've been told in this is 5 years. But payment will be done in the 4th year when 80% of the work is completed. So the question is, when are we recording the transaction according to the cash basis? And when are we recording the transaction according to the accrual basis? Please remember the definitions and terms that we used earlier. Right. So, the first part is we're asking, when do we revenue recognition? When do we recognize the revenue? The second part is expenses recognition. In other words, when do we recognize the expenses? So let's look at the revenue recognition. You recognize and record only when cash is paid to the entity. Remember that in the cash basis form of accounting, we will only record when the cash has been received, physical cash has been received, or the transfer of that cash has been made. Okay, so remember, in this situation, this dam will be built over a period of 5 years, but we've been told that payment will only be done in the 4th year, when 80% of the work is complete. In other words, the project has not reached its full completion. Okay? So, in other words, that's in revenue. Now remember, we are looking at what would happen under the cash basis. So we're looking at an illustration or an example of something that would happen in the public sector. So the example of the entity was the water and sewer engineering plant. We looked at an example of something that could occur in this entity. And we're saying that when we recognize revenue, if we are recording this under the cash basis form, so we've been told you can only record when the cash is paid to the entity. The next one we're looking at is expenses recognition. You recognize and record every time expenses are paid for. What does that mean? In the construction of the dam, there will be expenses that will be incurred. Labor, the carrying of the bricks to the construction site, the pipes that are being cleaned. Whenever the water and sewer engineering entity makes a payment for those services in carrying it out on behalf of the municipality, that will be recorded under the cash basis when payment is made. Very good. Right, let's move on further to the next one. Okay. Right. So the next part that we are going to look at are the advantages and disadvantages of the cash basis form of accounting. Remember that it's very important that, as I said earlier, that you need to know the advantages and disadvantages. I will only focus on about two, but it's very important for you to be able to know at least minimum of about 3 or 4 that you need to be able to know very well. Remember that the questions that will be asked to you will be real life situations or case study scenario questions. So it will not be give me a list of advantages and disadvantages. For the level of university or tertiary education, you will not be asked in such a simple manner. Okay, so let us have a look at these advantages and disadvantages. Right. Okay, very good. So let's quickly go through about 3 of these. Right, I'll start with an advantage. Remember, we're looking at the cash basis form of accounting. A, it is simple to understand, which is self-explanatory. It's very simple to understand. You've received cash, you record. You've made a payment, you record. Okay, let's look at the disadvantage. One disadvantage. It takes an unrealistic view of financial transactions. Now let's look at that again. We are looking at a disadvantage of the cash basis form of accounting. It says it takes an unrealistic view of financial transactions. What does that mean? What that means is the following. If, for instance, I'm only recording transactions using the cash basis, it means I'm only recording transactions when I have received physical cash. So what happens if Mr. A comes to my shop, I sell cell phones, and I sell each phone for 100 kwacha. Mr. Piri or Mr. A comes to me and buys one phone. He gives me 100 kwacha and he takes the phone. Mr. B enters my shop and says, I would also like a phone, but could I kindly pay at the month end? And I agree. So basically, I give over the phone, we sign a contract, he says he will pay me at the month end. Mr. C comes into the shop and says to me, I would also like a phone for 100 kwacha. Could I pay you 20 kwacha today, and I'll pay you the 80 at the end of the month. Now, let me ask you the following. How much cash have I received? Mr. A gave me how much for the cell phone in cash? 100 kwacha in cash. Mr. B said to me that he would pay me at the end of the month. And then Mr. C gave me 20 kwacha, but told me the 80 kwacha will be paid at the end of the month. So in cash, how much have I received? 120 kwacha in cash. But how much revenue have I actually earned? Because if I say that I've only earned this amount of money, it's not very realistic. In actuality, the real amount of money that I've earned, have not received the cash yet, is actually 300. So that's why we say it's unrealistic. Okay. B. Okay. It eliminates the existence of debtors and creditors. Remember, in the cash basis form of accounting, we have no debtors or creditors. A debtor is someone that owes you money. So B, for instance, Mr. B, who promised to pay me 100 kwacha for the cell phone, he would be a debtor. In the cash basis, we don't record him because no cash has been received. Okay? So we have no debtors and no creditors. Let us say that we buy our cell phones from China and we have a deal with our supplier where we give supplies for the cell phones and we will pay the supplier within 2 months. In that situation, we don't record that transaction because we have not paid any physical cash. That's another advantage. Okay. Let's look at the disadvantage on the other side. It does not provide for depreciation since assets are written off in the year of purchase. Okay? You must remember that depreciation is the wear and tear of an asset. An asset over time will lose value. If you take a car, for instance, when you are driving it, the tires will wear, the paint job will wear out. What happens in this regard in the cash basis form of accounting is you write off that depreciation in that time that you have actually purchased that asset, which is a disadvantage actually in the long term of your financial recordings. Okay, now what I would like you to be able to do is that to go through further and read more on the other advantages and disadvantages of each of these forms of accounting or basis. Right. Now, we've explained what the accrual basis is, so now we can jump to okay. Let's look now, mind the error here. This should be advantages and disadvantages of the accrual basis from accounting. It's stating cash basis, but it should actually state the advantages and disadvantages of the accrual basis. By now, I'm sure you have come to terms with understanding what the accrual basis from accounting is. Okay, this is when revenue or expenditure is recorded when it has occurred, okay, or earned, even though no physical cash or money has actually been paid out. Very good. So what we are looking at here at the moment is what are these advantages and disadvantages when it comes to the accrual basis form of accounting. Right. Okay, right. So once again, I will only focus on about two disadvantages and advantages. You can read further on the others. Right, so let's look at one advantage. A, it takes a realistic view of financial transactions. It takes a realistic view of financial transactions. Remember, with the accrual basis, it records, in fact, a very important point, it will record both the cash that has been received, but even the money that has not yet been received yet will still be recorded. So total sales will include credit sales. Remember, the term credit means that you have made a sale, payment to be paid later or to be received later. So in the accrual basis, all that is shown. So it shows a true recognition of the actual transactions that have taken place within that entity in the public sector. Okay? B, another advantage, if we look at the two disadvantages, it reveals an accurate picture of the financial affairs of that period. Just like I stated now, you'll be able to understand how many transactions actually occurred. Whether it's with money that's been transacted between the two, or it is with money that is still yet to be received. It gives a clearer picture, which is more accurate. But when we go to the disadvantages of the accrual basis, the first one is very difficult to understand, especially for non-accountants. So if you have not learned the accounting terms, for instance, and you are to speak to somebody in the informal sector, let's say that I am an electrician, and I fix your geyser for you, and you say to me that you will pay me 500 kwacha within 2 weeks. When I go home and my wife or children are asking, say, how much have you made today? What you would say if you're a non-accountant is, I did not make any money. But if you understand some of the terminologies of accounting, you might say, I have made revenue of 500, but I will receive it later. So in other words, you recognize that you have made a profit. You do not look at the fact that cash has not yet been received. So some of the terminologies can be quite tricky. This is how we look at depreciation, for instance. So in other words, if you have a business, you would need some form of basics understanding of accounting to use the accrual basis. Another disadvantage is it does not permit easy delegation of work. The reason for that is, in order for you to pass that work along, it has to be somebody who has some basis or basic understanding of accounting. But if you look at the cash basis form of accounting, if I'm selling, for instance, fruits, apples and bananas, and I record only when I receive cash, if I quickly need to go to Airtel Money or so forth, I can leave my work with even a friend or anyone, because the job is very simple to understand. Sell and receive money. So it's an easy job to delegate in the cash basis, whereas the accrual basis is more technical and it's not as easy to delegate to the next person. Right, let's move on to the next. Right. Now, we're introducing now a different basis, which is the commitment basis. Now, the commitment basis of accounting is a base that records anticipated expenditure, contract or purchase order in public sector financing. Look at this carefully. Commitment basis accounting records anticipated expenditure. So, an example of this would be the contracts or construction business. So within the government, for instance, there is construction projects and tenders that are given out, right, to those successful tenders that actually win those contracts. Now, in the construction business, what you do is that you obviously draft a report that is of anticipated expenditure, how much you believe it will cost you for bricks, the cement, the wiring, roofing, installation, and so forth. So your bill, I forgot the term that they use, bill of contents, I forgot the term, basically will include that. So in other words, it is anticipated expenditure. The cost might reduce and so forth, but you actually budget around that anticipated expenditure by forming a contract. So there is a commitment that has been created between the two parties. This is when we use the commitment basis form of accounting. Okay? So it's very important to understand, okay, which type of industry would this be good to be used in? And we've just indicated now that this can be very good within, for instance, the construction industry. The next thing that we're looking at were the disadvantages and the advantages of the commitment basis. Right. Okay, very good. Now, for this, I'll only look at one example of an advantage, one example of a disadvantage. You may read on the others. Just for you to get a good understanding and feel. Now remember, once again, the same notes that we are going through are also available on the portal and also on the e-learning platform. If you have any problems or questions, feel free to contact me once again via email or through one of the WhatsApp groups. Great. Okay, let's look at a disadvantage. A, the system involves extra work. Actual figures have to be substituted for the commitment provisions to finally determine the running balances under the subheads of expenditure. Okay? Now look carefully, actual figures have to be substituted for the commitment provisions. Now let me explain what this is. Let me try to simplify it for you. Simply, imagine that you say, I think it will cost me 600 kwacha for the bricks. You're building a wall. So you're estimating it will cost you 600. You're estimating labor will cost you 200. So you believe that's 800. You believe the building of the wall might take a period of 1 week. Now, when you actually now buy the actual bricks, you find out that the cost was 400 and not 600. The labor that you actually got was cheaper. Instead of 200, it was 100. So remember, you have the heading, construction. Under construction, you have subheadings. You might have bricks or raw materials, bricks, labor, worker. So for the worker, you first had the commitment, or you had the commitment provision. So you thought for the worker you would pay 300. But what happened? The actual cost was 100. So what's the balance? 200. So you basically have to look at what was the amount that you committed to, or you anticipated. What was the actual figure that you actually spent? And we have to now have a balance to deal with that. Now it becomes a little bit more complicated as well. You will not have to do this form of accounting for exam purposes, but it's very important that you understand how it works, okay? So in other words, it's complicated, it's a lot of work. That's one disadvantage of the commitment basis of accounting. Let's look at one advantage of this form of accounting. Okay, so one advantage of this form of accounting is the following. A separate payment tabulation is available when required. A separate payment tabulation is available when required. So in other words, during the construction process, over a period, you might say the project of construction, for instance, would take a period of, let's say, to build this wall might take a week. You are allowed to say, right, on day 3, can I have a tabulation of how much has currently been spent? In other words, a breakdown of the current expenditure, which helps you to be able to compare what you're actually spending in comparison to your budget that you created prior to beginning the project. Okay, very good. Right, very good. So, very good. Right. So now we've actually now come to the end of this chapter. We'll just look at a few things that you should be able to explain at the end. Please take note, for the purpose of your exam, you will not need to worry about understanding the fund basis. So at the end of this chapter, when you have done your reading and gone through the video, you should be able to explain the cash basis of accounting, explain accrual basis of accounting. You should be able to distinguish between accrual and cash basis, or the difference between the two. You should be able to explain commitment basis. You should be able to explain the difference between cash, accrual, and commitment basis. You should be able to identify the strengths and weaknesses of each you should be able to define a budget. What is a budget? And the budgetary basis. Okay? In other words, what is a budget? Now, for this part, we have not gone through it on the video. I will speak about it in more depth a little bit later. But what you can do prior to our next topic is to read a little bit through on budget and budgetary basis form of accounting. Thank you for your time. I look forward to the next session. Have a great day, stay safe, and God bless.